Hey everyone, and thanks for jumping back into the cryptoverse. Today, we're going to talk about Bitcoin, and we're going to be putting back on our on-chain analysis hat, and we're going to be looking at a metric called value days destroyed multiple. If you guys like the content, make sure you subscribe to the channel, give the video a thumbs up, and also check out the sale on Into the Cryptoverse Premium at intothecryptoverse.com, where you can, of course, get access to the chart that you see in this video, as well as many, many more. Let's go ahead and jump in. So this is what the chart looks like, right? This is value days destroyed multiple. And in order to better understand this, I suppose we should first go through some definitions, all right? So the chart above is defined by, the chart shows the value days destroyed multiple, and it is equal to coin days destroyed times price. Clear as mud, right? Coin days destroyed times price. But what is coin days destroyed? Well, I'm glad you asked. Coin days destroyed is the sum of all native units transferred that day multiplied by the amount of days since those native units were last transferred. Okay? So, you're looking at not only how much of that crypto has been moved, but there's sort of a premium on it if it hasn't been moved in a very, very long time, right? So if Bitcoin has been sitting, at an address for 1,000 days, that's much more significant, and then it moves. It's a lot more significant than if it sat there for 1 day and it moved. Okay, so for instance, we give an example. For instance, if 5 Bitcoin has been held in a wallet for 20 days, then 100, and then it's moved, then you have 100 coin days destroyed. Does that make sense? So 5 Bitcoin in a wallet for 20 days and it moves, that's 100 coin days destroyed. So going back to this chart, value days destroyed is equal to coin days destroyed, which we've just defined, times the price. The motivation for this definition is to adjust coin days destroyed for both spending activity and price variance over time. Now, value days, because remember, this is the value days destroyed multiple. Value days destroyed ratio is equal to the 30-day SMA, or simple moving average, of value days destroyed divided by the 365-day SMA of value days destroyed. This way, we create an oscillator that compares short-term deviations of this from long-term deviations. And then finally, the multiple, which is what we've come to show in this chart, is equal to the value days destroyed ratio times the current supply over the maximum total supply. So we're just normalizing for the rise in supply and lifespan over time. So now that everything is clear as it possibly can be, let's just look at the chart. Okay, I mean, sometimes you just got to look at the chart and get an idea of what's going on. So I suppose the first thing that stands out is that it's been going up a lot recently, really since September of 2023. You can see that it's been going up quite aggressively, which again is actually in stark contrast to what happened back in September of 2019. Like, September, October 2019, we saw it bounce off of this level, but it only went back up a little bit and then just kind of kept on setting lower lows. This time, we deviated from that path, and instead of setting lower lows, it's just been shooting up, right? It's been shooting up quite aggressively, in fact. And it recently went to a level value of 2.62. Now, I wanted to put that, in the realm of like, what does that mean? Or, what is it? How does it compare to prior moves? And there's several different moves that we could look at. And so we'll just take a quick look. So the move in 2021, you can see that this metric topped out actually before price topped out, but it topped out at just under 4. Okay, just under 4. In the cycle before that, you can see that it topped out at around 4, but again, it did not mark the final high in price. The cycle before that, you can see that it topped out at around 4.2, the high for price was already in when it topped, and then it also topped in at about 4.4, the first peak. Once it topped, the high in price was already in. And then finally, in 2011, you can see that once it topped, the high for price was already in, and it topped out about 3.3, right? So far, it's gone to 2.6. Now, these are the major peaks we've looked at, and those major peaks in this ratio are all higher than where the ratio currently is. Now, an astute observer might note that if you exclude this peak over here and you just look at, this peak, this peak, this peak, and this peak on this metric, it has been, the peaks have been getting smaller, right? It hasn't been going as high on each subsequent peak. You also might know that there was a 2019 move that topped out at only 2.29, right? So we've actually gone beyond where it went in 2019, despite the fact that price in 2019 from the bottom went up more than it has so far since this low, right? So since from the November 2022 bottom, we've actually seen this metric go up a lot more than it did back over here in 2019, despite the fact that the price in 2019 went up a lot more. And I mean, a lot of it obviously is going to be due to the increased time frame that this move has taken to play out compared to, to the one in 2019. Okay, so I think this is a useful metric to look at. It's not, again, I'm not asking you to take it to the bank or anything like that, but it does show you that there's sort of some like background noise levels that you can see that Bitcoin sort of operates in at various stages, when the market's relatively boring. And then when it goes into these moves here, right, where it goes up extremely aggressively. I mean, it essentially doubled up in just a couple of months, really. When price doubles up in a couple of months, you can see just how quickly this thing moves. And interestingly enough, I mean, if you go back and look at this ratio here at 0.0 or 0.6, around where I found that bottom, that's not too different from where it, found these bottoms over here, right? Like 0.6. Here's another one at like 0.7. Even the one, even some of these in 2019 were around 0.6. The main difference being that it kept on putting in lower lows after that. Now, again, there are differences in the move from 2019 and the one today. For instance, the one in 2019, it basically ended halfway through the pre-halving year. Okay, this one has been going on, and we're still we're done with the pre-halving year, and we're in the halving year. So it has been a lot more aggressive this time around. The one interesting thing is that when you look at price history, there's never been a time where this metric was this elevated at this phase of the halving year, right? So if you think about 2020, this metric was a lot lower, right? You think about 2016, early 2016, it was still somewhat elevated, but it wasn't way up here. I mean, these levels that it's currently at are more comparable to late 2017 or mid 2017, like June 2017, or getting pretty late in some of these 2013 moves, or in the last cycle, akin to November of 2020, December of 2020. I mean, first November, but then it came back down and then it popped back up. So just November, December of 2020 is where it is, and so is where it sort of best corresponds to. And it kind of goes back to this idea that we've been talking about for a while, that the market is just sort of chasing one narrative after another. You had the ETH merge narrative, which sort of led to the unseasonal move by Ether Bitcoin back in Q3 of 2022, which is not a time that Ethereum normally makes a move against Bitcoin in the middle of the bear market year, right? And you look today at the Ether Bitcoin pair, and for January, it's really struggling. And a lot of times in January, Ether Bitcoin does quite well. This January, it's stuck in traffic on Struggle Street. And my point, that I've made a few times, is that we're just sort of chasing these narratives back and forth. Well, yes, Ethereum did well against Bitcoin going into the merge, but I almost wonder if it's paying the price for that now by not performing as well during what is normally a fairly favorable time for the Ether Bitcoin pair. And so we had this rally into the halving, into the spot ETF, right? We had this rally into the spot ETF and, chasing the narrative, right? And then what happened directly after the spot ETF? Well, what happened is everyone started chasing the Ether Bitcoin pair, right? Everyone started chasing that. And I mean, it's given back a lot of those gains, but I will see what it does here in favor for potentially the spot Ether, the spot ETH ETF, right? So one narrative chasing Bitcoin, then chasing the ETH ETF. But then now that's completely faded, as I wonder if people are still thinking like, well, we don't know if the ETH ETF will even be approved, and if it does, it might not be approved until May. And between now and then, we have a Bitcoin halving, and that seems like a pretty comfortable narrative. That might be one of the reasons why dominance has been, has made a U-turn here, right? I mean, it's made a U-turn at around that 50 to 51% level, and it's starting to move back up, chasing narratives, right? And so, when you look at this chart, I do wonder where we are right now. Fast forward another 3 months. I don't know what it's going to look like. I don't know if this metric's going to be a lot higher or if it will kind of top out prematurely like it did in 2019. The one thing to remember about this 2019 move in terms of the context of value days destroyed multiple is that it really topped out in July, which is when the first rate cut arrived, right? We know that July was when the first rate cut arrived. And, I don't know when the first rate cut's going to arrive. Market thinks it's currently going to be May. It could be March, but market seems fairly increasingly confident that it's not going to be until May. Still about a 44 to 45% chance we get one in March. So if it were to mimic 2019, then if you get a rate cut in March, then maybe that implies that it sort of, that metric starts to slow down in February. Or if it follows May, then perhaps the metric starts to slow down in April, right around the time of the Bitcoin halving. So it sort of goes back to this idea of chasing narratives, right? You go from chasing the merge narrative to chasing the spot ETF narrative to then people chasing the ETH spot ETF narrative, and they're like, oh crap, that's not till May. Back to chasing the Bitcoin halving narrative, and then maybe they go back to chasing the ETH narrative, this ETH spot ETF narrative in May, right? There's always a chance that something like that happens. But it certainly is interesting how this metric is much further along now than it has been in prior halving years at this time. It sort of implies that people are really loading up for these big events to play out, and you have to wonder if once the event comes and goes, the market's going to be searching for the next narrative, right? And maybe the next narrative is the ETH, the Ethereum spot ETF, or maybe it's something else. But this is certainly an interesting chart to keep an eye on because it is getting relatively elevated. I mean, it's gone all the way up to 2.62, and not too far away. It's not too far away from some of these other levels. And I think the more interesting thing is not that it's not that far away from them. It's just that once you reach these levels, right? Once you reach these levels, the market was, getting relatively heated at that time. It didn't mean that it couldn't go on for a bit longer. And in fact, the one in 2017, after it hit this level, went on for another half year. In 2021 or 2020, when it hit this level, it went on for, maybe about 4 more months. In 2013, when it hit these levels, it went on for basically just another month or so. Same thing in 2011, when it hit this level, it basically just went on for another month. So sort of shows that, hey, yes, we're the market's chasing all these narratives, but once we get further out, right, once we get out past the halving and whatnot, I imagine will be, the market will be searching for whatever that next narrative will be. And that's when you might finally see this metric cool off for a while, right? And it's not, I mean, it's only natural. I mean, you can see that in 2019, it cooled back off and then it went up, right? Again, a year later, right? And over here in 2013, it cooled off and then it went up again half a year later. But my guess is that it starts to cool off probably, I mean, sometime in the next few months. But if it hasn't cooled off by summer, I imagine that summer would be a prime time for it to cool off if it hasn't done so before then. So interesting chart to take a look at. And I do think a lot of it will really depend on monetary policy as well. I don't really think it's just a coincidence that that this metric sort of topped out when the first rate cut arrived last cycle, and so I wonder if it'll do something similar, right? Plus or minus a month, right? I don't think it has to be exact, but certainly an interesting chart to take a look at. Again, if you guys like these charts, make sure you check out the website, intothecryptoverse.com. We have the sale going on right now. You guys can sign up, lock in that lower rate. Again, if you guys like the content, make sure you subscribe, give the video a thumbs up, and I'll see you guys next time. Bye.